Welcome back to Swadhyay for CA. Let us continue the revision of basic concepts of income tax, and previously we have discussed section 4, charge of tax, where it is stated that the tax charge is on every person specified under section 2 clause 31. So let us see who are included under the definition of a person. A person includes individuals, a Hindu undivided family. Both Mitakshara and Dayabhaga school of Hindu law are included under the term HUF. So guys, what is the difference between Mitakshara and Dayabhaga? Simply put, under Mitakshara, one acquires right to the family's property by his birth and not by succession. It is followed all over India, but in West Bengal and Assam, we find Dayabhaga school of Hindu law. In Dayabhaga school of Hindu law, the right or share in the property is acquired by sons only on the death of the father in the family. Coming back to our definition of a person, after individuals and Hindu undivided family, the other entities included are companies, both Indian companies and foreign companies, firms which include partnership firms and limited liability partnership firms, association of persons, body of individuals, local authorities, and artificial juridical persons. So all these entities are included under the definition of a person. Now that we have discussed the definition of a person, let us now discuss about one more term mentioned in the section 4, that is total income. The definition of total income under our Income Tax Act includes vast number of items such as profits, gains, dividends, capital gains, perquisites, lottery winnings, etc. But how do we arrive at such total income amount? How do we determine the total income of a person for computing his or her tax liability? Guys, let us go through the following flowchart. Here there are steps through which total income is computed. Number 1, determination of residential status. First, we have to determine if the person, the assessee, is resident or ordinarily resident, or resident not ordinarily resident, or non-resident. We will be discussing about the residential status in our next chapter, chapter 2, residential status. And coming to the next step, we have to classify the incomes of the person under 5 heads. What are these 5 heads? They are salaries, income from house property, capital gains, profits and gains from business or profession, and income from other sources. Once classified, the total amount under each head of income is computed and we arrive at aggregate amount of income from all the heads. We also provide for any exemptions or deductions pertaining to each head to arrive at net income chargeable under each head. Then in the 4th step, if assessee's income should also include the income of his or her spouse or minor child which is taxable, we club such income. In the 5th step, we set off any losses of current year, and if there are any losses we have carried forward from previous years, such losses will also be set off. Once we have aggregated net incomes from each head, club the income of spouse or child where applicable, and setting off of losses is done, we arrive at a figure called gross total income. It is from this gross total income we provide for deductions under chapter 6A. So, the amount we arrive at after providing for gross total income is called total income. Guys, once we arrive at the total income, we apply the rates of taxes as mentioned in the Income Tax Act or Annual Finance Act. Not just tax rates, there will be few cases where surcharge. Surcharge means an additional tax that is payable over and above the income tax. So, in few cases, surcharge will also be applicable. If not surcharge, there might be few cases where a rebate under section 87A will be applied to the individual and resident taxpayers. Only for individual and resident taxpayers, rebate will be applicable. And also there might be cases where the total income will neither be affected by adding surcharge or by providing for rebate. So in the next step, once the surcharge is added to the total income or rebate is provided for, or no such effect is given to total income, 4% of tax payable amount is added to it, which is called as health and education cess. So health and education cess will be charged at 4%. After adding health and education cess, now it is time for assessee to opt for the default tax regime under section 115 BAC or go for the alternate minimum tax option, etc. We will be discussing about these regimes in further videos. Once the assessee has opted for a regime, the TDS or TCS amount are provided for, or the advance tax amount paid by the assessee before is provided for. After adjusting advance tax or TDS or TCS, tax deductible at source or tax collected at source, we arrive at a figure called either tax payable, which means the assessee has to pay tax to the department, or he might arrive at a figure which is called tax refundable. That is, the assessee will get refund amount after filing of return. So this is the procedure through which we determine the total income of any assessee. Not only that, this procedure also serves as a route map for us to complete our syllabus of direct taxation. We will discuss further concepts in our next videos. Thank you.